and welcome to the Cybers edition of Fin Business. And we have some very interesting insights today to share with you. We have our guest Marc Niederkorn from McKinsey. We welcome you to Fin Business. And going by the report, so what kind of composition of the payments business appears to you, especially when you compare the Asian, the European and the American payment scenario?
Yeah.
What is the composition of different kind of payment businesses that you have?
We analyze the evolution of the payments market every year in what we call our global payments map. We have been doing this now for over 15 years. This is the oldest instrument, we believe, in the industry for the moment. And there's a number of things that we try to understand. First of all, we try to understand a little bit just the growth trends going on. And what we do see is that 2016 has been indeed a very successful year. We had 5% global growth on the payments revenues, which were largely driven by very strong performance of the Asian markets. The US also holding up quite nicely. Individual Latin American countries doing quite well. Brazil very much growing in the high teens, low 20s as far as revenues is concerned. And Europe, nevertheless, being a little bit more disappointing. We saw the European revenues actually shrink by 3%, which is pretty much due, we believe, to, on the one hand, still strong growth on the transactions, but on the other hand, the tail end of the interest rates coming down, which has depressed the liquidity revenues quite a bit. But so overall, a very positive year. We also do a projection every year on growth over the next 5 years, so 2016, 2021. And there we are actually very confident. We believe that payment revenues in our central scenario will grow by about 7% on an annual basis, which is quite healthy growth. And here again, what we are seeing is a lot of the growth is going to be driven by still further increasing liquidities and liquidity revenues across all geographies, and then in particular also credit card revenues, in particular in the US, in Latin America, but also in Asia. Now, if you look at the way in which these payment revenues are put together, there is a quite big difference between the geographies in terms of, is it more the liquidity side or is it the credit card side, as we already discussed. There's also quite significant differences, as far as is it the retail side or the corporate side, which is growing more. But overall, I mean, we have a quite healthy scenario. Now, all of these scenarios are obviously dependent on a number of hypotheses. The major ones that we're taking always is, on the one hand, economic growth. And what you see is our central scenario, is based on a quite healthy global growth of around 5% of GDP globally. If that were to increase by 0.5 percentage point, that would have an impact of almost 1.5% growth on the payment side. The same on the downside. So that is obviously one impact. The second one is the evolution of interest rates. That has an impact.
One thing that I could note from this report also, there is a disparity of the composition of growth between Asia and the European market, etc. You would still see that the cards remain as an important area of growth even in Europe as well as in the Americas and stuff like that.
Yes. So, yeah, please.
Yeah, and if you look at markets like India or China, the digital thing has taken up a very big push when it comes to payments. So how do you look at these areas?
So the Asian growth has been amongst the strongest over the last years. It is very much driven by China, of course, and in particular by commercial revenues. So account-related liquidity on the commercial side is the strong driver of growth. Credit cards, in particular in Asia Pacific, is a more limited growth phenomenon. Overall, they only represent 7% of the total revenues that we are measuring in the region. So yes, it is healthy growth, but in the overall equation, it is more limited as far as the relative weight is concerned. Also then on the negative side, by new ways of payments emerging, that will have a more limited impact on the Asian Pacific side. In the US, in North America in general, the credit cards represent close to 30% of the revenues. So obviously any blip on that side has a major impact on the overall performance.
So how is this immediate payment business going to have an impact on the payment revenues? in the American and the European side?
I think this is the revamping of infrastructures, in particular instant payments, is obviously one of the major developments over the last years and also in the years to come. Infrastructures in Europe, for example, are now coming on stream at last. And what you do see is that there's obviously a number of questions arising. First of all, what will be the pickup rates of instant payments? Second, how will banks market this? Will this be a premium product, or will this effectively substitute normal SEPA direct debit and credit transfer payments, in particular the credit transfer payments? Will this have a major impact on substituting cards? By opening up possibilities of real-time POS type of payments, for which obviously lots of levers can be imagined. So those are all the questions that we're very actively discussing with our clients. It is absolutely correct to say that if this is something which in many of the emerging markets is already a given. It is there and it is being used quite widely. In Europe and also in the US, this is coming to maturity now. And so I think the adoption of this is an interesting phenomenon that we will watch. Now, I think when we talk about electronic payments in general, what we have seen is so far there's been relatively limited substitution. It has always added to growth. So all new inventions or new ways of payment have accelerated cash substitution in a major way. So that's definitely something that we also expect to happen in this environment. It is also fair to say there's a number of geographies, if I look at my European environment, where people are quite skeptical still about the need or the usefulness of instant payments. So essentially wondering whether there's a real use case and a real use for this. Other geographies, you've seen quite rapid adoptions. Certain countries have decided to essentially shut down their batch infrastructure and to only move towards real time.
If I may ask you to encapsulate 2 or 3 interesting areas where there are A, opportunities
Yes.
for the payment space, and B, the kind of threats in the payment space,
Yes.
what would you put it at?
One area is the whole domain of cross-border payments. And cross-border payments represents, we estimate the total market of payments to be about 1.6 trillion. Cross-border generates about 340, 350 billion revenues for the different players. This is a market which goes to the consumer-to-consumer type of payments, typical remittances as we've known them traditionally, up to business-to-business payments. The volumes obviously differ quite a bit. Consumer-to-consumer is about 500 billion in volume, with very rich margins. So we're talking about 400, 500, 600 basis points being charged usually. On the other hand, the business-to-business is much bigger. We're talking about significantly higher amounts being transferred, but the margins being obviously much smaller. Now, what you see in this area is that the traditional remittances side, the consumer-to-consumer transfer, has been attacked early on by quite creative fintech attackers, offering very attractive ways of doing transfers for smaller to medium amounts of money, so below $1,000 or between $1,000 and $5,000. What you do see in that area is that the user experience through these attackers has changed dramatically in terms of speed, in terms of transparency, in terms of also cost. And that has had a double effect. On the one hand, in these areas, banks had to catch up traditional banks. But secondly, what you also see is that, in particular in the business-to-business space, corporate treasurers have woken up to this and say, well, how come we're having a fantastic experience when I send money to my daughter studying abroad, etc., and why is it that the traditional correspondent banking experience is a very poor experience still? What this has led to is, on the one hand, pressure from the customer side, and then a reaction from the banking sector, amongst others, Swift GPI being a direct consequence of that. So this is clearly an area where we had the opportunity of studying quite specifically user needs, use cases, and from there come up together with Swift with the first version of what this GPI value proposition could look like. Now, about 2 years later, we see that the success is there. I think they state now that about 30% of their payments, are final and money is in the account within the hour. About 80% of the payments that transit via GPI, it's in the account in a day. So that it takes away a significant part of the value proposition of the attackers. What does remain, nevertheless, is the reasonably high cost level that cross-border payments in the classic correspondent banking model have. We made estimates, and depending on how you look at it, we believe that an average transaction could be 25 to up to $35. That is obviously a level which is not sustainable. If you compare that to what a number of competitors are able to offer today, what the domestic payment costs, those are levels that are not sustainable in the long run. So what we do see is obviously on the one hand a number of alternative models still thriving, and we've seen companies very successfully attacking this space. And on the other hand, banks now very closely looking at what is the real cost structure, how can we get cost out of this space.
Great, Mark, that was very empowering insight from
Thank
your
you.
side. And we really appreciate the kind of report that has been come out from the table of McKinsey, and we look forward to see a whole lot of the predictions you have made come true.
So let's meet again in a year from now and see how things look like. Thank you.
Take care. Wish you all the best.
Thank you.